What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you how I feel about the market conditions as well as what stocks are at the top of my watch list going into the week ahead. So without any further ado, let's jump right in. Okay, so to take a look at the markets, like always, I usually start with the NASDAQ, the S&P 500, and then the Dow Jones. That gives me a good idea of how the broad markets are doing in a couple of different areas. And so with the NASDAQ, as you can see, it was not a great week. We definitely sold off pretty hard on Thursday and Friday. We're kind of coming down to this 13,000 level of support that we established at the end of January there. And we are still in a pretty significant pullback from all-time highs. The NASDAQ is not doing well. It's a very choppy market. And it is not great conditions right now. So that's what the NASDAQ looks like. When we look at the S&P 500, we can see a very similar pullback or sell-off on Thursday and Friday here. Again, testing that same level that we established back at the end of January. And so very similar charts on the S&P and the NASDAQ. And when we look at the Dow Jones here, it's also very interesting. We can see that 34,000 has held up as a very key level of support several times over the last sort of 6 months. And now we are right here testing 34,000 right again. We're currently at 34,079. So it's going to be very, very interesting to see where we open and close on Monday. If we close below 30,000, that's going to be a very bearish sign, and it's not going to be very good. Now, when we look at cryptocurrency, we saw a bit of a sell-off as well in Bitcoin on Thursday and Friday. As you can see here, we took a major dip from 43,000 all the way down to around 39,000, currently trading at 40,000 US dollars right now. We saw a great breakout of our trend here. I actually put some money into Bitcoin. I'm down a little bit now on this little sell-off here, but we have not broken kind of our short-term trend that you could say has formed right here. I'm just going to try and put a line on it so that you can see this. So we have not broken this sort of trend right here, but if we do break down here and we come down to 37,000, again, not a good sign, a little bit of a bearish sign. We'll kind of have to see how the week starts on Monday or Tuesday. But Monday is a holiday for a lot of people, including myself, and so on Monday, we don't have a whole lot going on. We definitely don't have anything going on before the market. But on Tuesday, that's when everything sort of picks up. We've got Home Depot reporting. We've also got Macy's. We got Krispy Kreme. We got Teladoc, Virgin Galactic, Mercado Libre. So we got a couple of big companies on Tuesday. On Wednesday, we've got Lowe's and Overstock. We got Skills and Hertz and Fubo. And on Thursday, this is actually the big one that I'm looking for. I'm really interested to see how Alibaba does. We've also got Block, also known as Square, or formerly known as Square. Then we have Coinbase and Etsy and Beyond Meat and even Open Door and Nikola. So we've got lots of companies on Thursday, and then Foot Locker kind of closes us out on Friday. Now, when it comes to the market conditions, we have a couple of X factors, and the big X factor over the last sort of 2 weeks, and especially the next 2 weeks, is going to be the Russia and Ukraine conflict. Because if Russia decides to invade the Ukraine, that could draw other countries into the conflict. And if other countries start getting involved in that conflict, it can escalate very, very quickly, which is what we are hopefully trying to avoid, because typically war has not been a good thing for the stock market. It causes uncertainty and volatility. And during those times, we usually see not so great price action. Usually prices go down, especially for high-tech growth stocks that are relying on a healthy economy to do well. If we go to war and the US starts to gear up, things might not go so well, and there might be a little bit of volatility and some uncertainty. We also have a lot of concern around inflation right now. Canada just reported 5.1% inflation. I think the US is at 7% inflation. Both of those are record highs for the last 30 or 40 years. And we have an expectation that interest rates are going to drive or rise fairly significantly over the next year, starting with their meeting in March. I fully expect rates to increase at the March meeting on 15th or 16th, so you can definitely expect some volatile trading around that period as well. Now, with all of that said, what is the best way to handle this? How should we handle our portfolio? What stocks should we be looking at? And what stocks are going to do well in a period like this? Well, in my mind, we have a lot of factors that are contributing to a lot of uncertainty and volatility in the market. And usually when that happens, there's one thing that does really well, and that is gold. And if you look at gold right now, I've put this chart to like 1 year and 3 months, I think. And as you can see, we established highs at the beginning of 2021, in the middle of May here, and right here in November. And just recently, over the last sort of week and a half, we have broken out of this trend. We have broken out of resistance, and the price of gold is moving higher. Now, if you want just kind of direct exposure to gold, you can buy this right here. This is GLD. It is basically a gold-backed ETF, and so every dollar in this has to be backed by actual gold, and so it moves pretty much in line with the price of gold. Now, as the price moves up, we should also see a couple of gold stocks start to move up, and the gold stocks that I am interested in are Gold Mountain and Gold Mining. And so Gold Mountain is based out of BC. I've covered these guys several times, and as you can see, they ran up to a high of $3.12, came all the way back down to like $1.10 right here. We are now bouncing off of support, and we have broken out of our trend in line with the rising price of gold, and in my mind that is additional confidence. That is a great signal, and this represents a buying opportunity. So I picked up a couple shares of Gold Mountain this week. I think it has a ton of room to run up to around $2 and possibly even $3. And the other gold company that I'm really interested in here is Gold Mining. Now, I have talked about these guys on my channel before, and as you can see here, we have a little bit of a double test right here at $2.25, same level that we saw some previous resistance right here in the spring of last year. And I am thinking that if we can break through this level of resistance, we've got lots of room to run all the way up to around this 3.5 mark. So I'm watching this one very closely for the breakout. I do think we have great support at $1.40 here, and we're definitely going in the right direction. So those are the two gold stocks that I like. Now, if we do see an escalation in the conflict between Russia and the Ukraine, I do think that some of the defense companies or some of the defense stocks could do very well. These are the companies that make the ammunition or the weapons or the guns or the planes that feed the war and that basically protect us or the country that's fighting in it. And so I think that as these conflicts escalate, these stocks will probably do fairly well. And so I'd be watching the conflict very closely and seeing if it has any direct correlation with the next three stocks that I'm going to talk about, starting with Lockheed Martin. Lockheed Martin is really interesting here because, as you can see, we're trading in a pretty clear channel. We have well-established support at 325. We have well-established resistance right around 400. We're currently trading at $386, so we're within a couple percent of those highs, and I am watching for the breakout right here, especially if we see some positive news of a big order of airplanes or anything like that. I think Lockheed Martin could do very well if this conflict continues to escalate. Now, the next one here, under the same situation where if this conflict continues to escalate, Northrop Grumman could do extremely well. We've got previous resistance right here around 408. We have a higher low that is set compared to the previous low, which means we're starting to go in the bullish direction here, and we just bounced off our 200-day moving average. Very, very good signs here. If we can break through 408, I think that's a great buying opportunity. Now, the last sort of military stock that I want to point out to you here is Raytheon Technologies. This is actually the largest of the three kind of defense contractors. And as you can see, they sold off from $93 all the way down to $40 at the height of the pandemic. And then since then, they have made a beautiful rally all the way back up to the exact same highs, the exact same 93.44 that we saw back here at the beginning of 2020. That's pretty much exactly where we are trading right now. We even saw a little bit of a breakout. It looks like we might be retesting this support level right now. But if this conflict continues, I think Raytheon could be probably the top three out of the three that I just suggested. This one probably has the most room to run, and I think there's a great opportunity here. Now, all of those plays so far are basically based on volatility and fear and greed, and if the markets kind of take a continued pullback, and if the conflict continues to escalate, and if inflation gets worse. That's what those stocks were for. Now, the next two stocks that I want to tell you about are for the other scenario. If things get better, and if things recover next week, and if the conflict starts to dissipate and inflation starts to come down, these are the stocks that I like. So starting with eToro. Now, I'm not saying to buy into eToro right now. eToro is a company that I really like. They're a trading platform, but the problem with eToro is that Robinhood has absolutely tanked. They're trading at all-time lows right now, and that's probably the best comparable company to eToro is Robinhood. And so unfortunately, I think that's sort of gonna bring the stock down, and it's not really gonna look so good for it. However, eToro is still in a SPAC phase, and that deal is trying to close. Now, it was supposed to close last year. It didn't close last year. It got delayed, but it looks like it's still on track to close. And when it closed, I think that's going to be a big catalyst for eToro, because this stock is still trading at the $10 price level where the deal started at a year ago. And eToro has only got better. The numbers have only gotten better, and the company is doing very well, in my opinion, from what I can see. And so when this deal closes, I think eToro stock is going to go up by a decent margin. And what's really interesting right now is that if you look at the volume and the price action over the last 2 days, I think it's starting to show us that somebody might know something. The reason I say that is because over the last 2 days, we have started low and we have closed high. That means that people are buying, people are buying, people are buying all day long. And just on Friday here, we had volume that was higher than any volume that we have had so far this year. We had more volume yesterday than we have had in the last kind of month and a half, almost 2 months here. And that could be a sign, or it could be an indication that this deal is about to close, that we've got some good news coming down the horizon, and somebody might know about it a little bit early and they're picking up some shares. So in my opinion, I like eToro as a business. I like eToro as a stock. I want to be an investor in it. I'm not an investor in it right now, but this could be a nice little glimmer of hope that this deal is about to close and that we could get some big news pretty soon. Now, the last stock here that I want to point out to you is Uber. I actually made a video about this company earlier this week with some deep dive analysis in it. So if you want to see that, definitely check it out. But the reason that I like Uber is because they just put up a phenomenal last quarter. Their revenue is over $5 billion. It's like a $63 or $67 billion company with $20 billion in annual sales. Like, you're just not going to find that very often. I think Uber was kind of the unicorn where the price got away from it. Now the price has pulled back, but Uber still continues to grow. And I think we're kind of at that intersection where there's actually good value in Uber at the current price, as long as things continue to kind of rebound and recover. But if we go into war and we see a big pullback and we see just a market crash, Uber stock's going to crash as well. However, if that doesn't happen, I like Uber. The reason I like Uber is because I think we have major support at $28 right here and $33 right here. I think it's trading at a very reasonable valuation compared to the sales that it's bringing in. I think they're going to be profitable very, very soon. And I think the business model that they have is growing very quickly. It's growing exponentially. And I think it's a great business model because it helps other people make money. So I really, really like Uber over the long run. Now, here are the things that we need to consider right now. We have a major conflict between Russia and the Ukraine. We have major inflation going on right now, and I think we're going to see more volatility around March 15th and 16th around that Fed meeting, and probably, in all likelihood, an increase in interest rates, which could have a negative impact on growth stocks. I've made a video about why it has a negative impact on growth stocks, so definitely go check that out on my channel. And if you want to learn more about how to look at companies like this and invest your own money, then definitely check out my full stock market fundamentals course. It is completely free for 2 weeks when you sign up with the link down below, and you get access to my 10-hour course with over 11,000 students that have gone through the course, over 380 reviews, and 1.6 million minutes of watch time. I promise you, it'll be the best free resource that you can find online. It's completely free. The link is down below. And if you got any value out of this video, please remember to click that like and subscribe button, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.